If you checked gold or silver prices this week and felt your stomach drop, you're not alone, because what we're witnessing right now is not just another pullback or a routine correction. This is one of those rare market moments where politics, power, psychology, and money collide at full speed, and the ripple effects are being felt from Wall Street trading floors to retirement portfolios across the United States. Because just days ago, gold and silver were sitting near historic highs, confidence was strong, headlines were bullish, and then almost overnight, everything flipped, prices plunged, volatility exploded, and traders started asking one urgent question: what just happened? And the answer starts in Washington, with a single name and a single decision that shook the precious metals market to its core, when President Trump revealed his pick for the Federal Reserve, a move that instantly rewired expectations around interest rates, the dollar, and inflation. And before we go any further, if you want calm, clear, no-hype breakdowns of moments like this that actually help you understand what your money is exposed to, make sure you subscribe to Metal Market Insight right now, because the moves happening today will shape the months ahead. Now back to the story, because the reason this moment matters so much is not just who was picked, but what that pick represents to the market. This wasn't a neutral choice, it was a signal, a loud one, that the Federal Reserve could take a tougher stance on inflation, a stance that suggests higher rates may stick around longer than many investors were betting on. And the second that signal hit the market, the US dollar surged, bond yields jumped, and suddenly gold and silver, which thrive in low-rate, weak dollar environments, found themselves under intense pressure. And here's the part most casual investors miss: this sell-off wasn't just emotional, it was mechanical. Because leading into 2026, gold had already logged one of its strongest multi-year runs in modern history. Silver had doubled in a relatively short time, and positioning was extremely crowded. Hedge funds were loaded, ETFs were heavy, futures markets were stretched, and when the narrative changed even slightly, those positions began unwinding all at once, like a packed theater rushing for the exits, creating violent price swings that fed on themselves. Stop losses triggered, margin calls followed, and what looked like panic selling was often forced selling. And that's why silver fell harder than gold, because silver lives at the crossroads of investment demand and industrial demand. And when economic uncertainty collides with tighter monetary expectations, silver gets hit from both sides. Now here's where it gets really interesting, because despite the chaos, not everyone is running away. While short-term traders are shaken, long-term investors are quietly watching, because beneath the volatility, the bigger questions haven't gone away. US government debt is still massive. Geopolitical tensions haven't cooled, supply constraints remain real, and inflation, while lower than its peak, is far from dead. And that creates a strange contradiction in the market, where prices are falling fast, but long-term concerns are still building quietly in the background. And this is exactly why volatility feels so extreme, because the market is trying to reconcile two opposing realities at once. And if you're watching this video right now, I want to hear from you. Do you think this drop in gold and silver is a warning sign of a longer downturn, or a shakeout before the next major move? Let me know in the comments, because real conversations help everyone see the full picture. And as this story continues, keep in mind that Federal Reserve leadership isn't just about one person. It's about how the entire market recalibrates its expectations. Rate cuts that once felt inevitable now feel uncertain. The dollar's strength is changing capital flows, and safe haven assets are being forced to prove themselves in a new environment. And yet history tells us something important here. Periods of extreme volatility in precious metals often mark transitions, not endings. Moments when weak hands exit and stronger conviction begins forming quietly out of the spotlight. And that's why this moment matters so much for US investors, whether you're actively trading, investing for retirement, or simply trying to protect purchasing power. Because decisions made in times of fear often echo for years, and as we move forward, watch how gold reacts not just to headlines, but to data, inflation prints, employment numbers, and treasury auctions. Watch how silver responds to industrial demand signals and economic momentum. And most importantly, watch how quickly sentiment can change again, because markets rarely move in straight lines. And if this breakdown helped you see the bigger picture beyond the price chart, share this video with someone who's trying to make sense of the chaos too, because understanding beats guessing every time. And as we wrap this up, remember, this isn't just about gold or silver. It's about how fast narratives shift, how power influences markets, and how staying informed can be the difference between reacting late and thinking ahead. This is Metal Market Insight, and the next move may come when the crowd least expects it.